Hey guys, welcome back to my channel. Today we're going to talk about gold, how two of the top world investors are currently putting their money into this shiny metal, why I plan on putting my money into gold, and why I think you should too. Before we go any further, if you appreciate content like this to help you make your financial decisions easier, please go ahead and like the video and subscribe to this channel as we post weekly content on the world of finance. Back to the video. Two of the greatest investors, Warren Buffett, chairman and CEO of Berkshire Hathaway, currently the fifth largest company in the world, and Ray Dalio, hedge fund manager of Bridgewater Associates, one of the top hedge funds in the world, are currently putting a significant chunk of their wealth in gold as they believe this is going to pay off in the near future. Obviously, as investors, they're not buying actual physical gold chains and gold watches to look fly for their next rap video. They're also not buying gold bricks to just stack up and take up space. They are buying gold mining and distribution companies. They're buying actual stock or stakes in this company, and I think you definitely should too. I believe every stock market long-term investor needs to have a diversified portfolio that includes some gold in it. But first, let's explore why this crisis is currently causing gold prices to skyrocket as investors are currently moving their wealth towards gold. Gold is typically a hedge against economic uncertainty and inflation, as the amount of gold in the world is fixed and it takes actual work to manufacture and distribute gold. Cash, on the other hand, is easier to manipulate, especially in today's digitized world where your cash is pretty much numbers on the screen when you log into your online banking. Those numbers are easier to manipulate as the government decides to. As we continue to navigate these uncertain times, the Fed is going to rightfully keep printing money to stimulate the economy in order to avoid a prolonged recession or a possible depression. This, however, might lead to the side effect of increased inflation. For those of us who don't know what inflation is simply the devaluing of currency. Inflation is actually good when it's controlled, as it helps the economy grow. When inflation is not under control, this can be terrible. If you don't believe me, go ask Zimbabwe in 2008, 2009, where you could be worth 2 billion Zimbabwe dollars but still not be able to afford breakfast. Warren Buffett has historically been against buying gold as an investment. He's even quoted to have said gold is a terrible investment. However, this pandemic has triggered a shift in his behavior. Although they say you can't teach an old dog new trick, Warren Buffett is 89 years old, but he has learned a new trick. He recently put down $500 million to purchase 20.9 million shares of a company called Barrick Gold Corporation, ticker symbol GOLD. He currently owns 1.2% of this company. And what's more surprising is that he let go of most of his banking stocks to make this purchase. Buffett dumped 100% of his shares in Goldman Sachs, 61% of his shares in JP Morgan Chase, and 26% of his shares in Wells Fargo Corporation. He has always been a value investor who has always been pro banks. The fact that he's cutting down his shares in banks to buy gold is surprising, and it means that he sees some value in gold in the future. Next, Ray Dalio, the #1 hedge fund manager and author of the book Principles. Trust me, link is in the description, check it out, you will not regret reading this book. He's aggressively buying two gold ETFs. The first is SPDR Gold Trust, ticker symbol GLO. He currently has $1 billion of his fund invested in this company, and this is by far his largest holding. It's actually ETF, not a company. His next holding is iShares Gold Trust, ticker symbol IAU, where he has almost $300 million in this fund. This is currently his sixth largest holding. These two ETFs are one of the top ETFs when it comes to gold. They're currently at all-time highs, and they track gold price exactly as it is. Gold currently broke the $2,000 mark, which no one expected, and they are currently outperforming the S&P 500, the Nasdaq, and the Dow Jones year to date. Year to date, the S&P 500 is up 5%, the Dow is down 2%, and the Nasdaq is up 22%, but gold is up 30%. That's it for the video, guys. Even at the peak of the pandemic, gold was barely affected, and right now the mining industry is being hit, and there's going to be a shortage in mining output, especially with gold. And with the increased demand for gold, prices are gonna skyrocket. So I believe you guys should position yourself where you can take advantage of this situation. Other precious metals like silver and copper are going to follow gold wherever gold goes. So I feel like we should position ourselves for success. Times of crisis is when the biggest opportunity to succeed long term presents itself. Don't let go of this opportunity. That's it, guys. See you in the next video. Go ahead and subscribe. Thank you.